Okay, Sheila, you can raise your hand just to make it easier for me. I'm a relationship manager at Standard Investment Bank. And I'll just go right into introducing the amazing panel that we have today. So I'll start with Sheila. Sheila is a research and financial analyst with a strong passion for financial markets and investment analysis. Her experience cuts across banking, fintech, credit analysis, bank assurance, and business payments, giving her rather a broad view of how financial markets and businesses actually work. Today, she focuses on turning financial data into insights that can inform real investment decisions. So welcome so much, Sheila. We also have Ronnie, who is an economist and market intelligence specialist and a trader also. Ronnie has worked across equity research, investment research, fixed income, and derivatives, and has experience with several financial institutions in Kenya. So he currently trades in fixed income and derivatives as Sterling Capital. So he brings us a perspective from the decisions, where decisions meet the market in real time. Ronnie, you're very much welcome. And then finally, we have John Collins Mbugua, an investment analyst at Faida Investment Bank. John's work sits at the intersection of equity markets, investment research, and capital markets intelligence. He has a strong focus on NSE and on translating what can sometimes be complex market movements into practical insights that investors can actually use. John, it's great to have you. I would like maybe for you to just say a word and then we continue with the discussion.
Good evening. Good evening. All right. Thank you so much for this session. Thank you, Lucy. Pleasure meeting you. I don't think we've actually met before. It's a delight to be here, and I'm looking forward to having this engaging conversation. Yeah.
We can go to Ronnie. You're muted, Ronnie. Maybe you can just unmute.
Sorry, I was speaking while muted.
Okay.
Delightful good evening to all listeners tonight. My name is Ronnie Choka. It's a pleasure to be here.
And then finally, Sheila.
Thank you, Lucy. Good evening, everyone. My name is Sheila Omboy, a research analyst at Axis Investment Bank, and I'm delighted to be here. Looking forward to the conversation tonight.
Wonderful. This is great. I see the numbers are coming in. Right now, we are close to about 65. So that's good to start. I know people will still keep coming in. If you have a question, maybe you can just drop it in. We'll try at the end to answer maybe a few. So this is supposed to be an interactive session. So I think you can share your most honest experiences to help these students as they plan to join us in the finance industry. So we'll start by understanding the field. What is finance and investment really about? So I'll start with Sheila. Sheila is, as she mentioned, she is a research analyst. And so research often forms the foundation of investment decisions. So when someone hears research analyst, they probably imagine someone spending the whole day looking at financial statements and Excels. So Sheila, what does your job actually look like on a normal day?
That's a good one, Lucy. I think the easiest way to just explain it is that we're just essentially trying to turn a lot of information into an investment view. So on a typical day, we're looking at financial statements, as you mentioned, we're looking at company results, looking at management commentary, and we're just trying to understand what, sorry, I have a few, I hope I'm clear.
Yes, you're clear.
Thank you. Yeah, so we're just trying to understand what all that means for investors. So for example, if maybe a company's profit increase, we're just not looking at, okay, so the increase, we're looking at the why, okay? We don't just stop at saying the profit increased. We just want to understand why did they increase? Was it revenue growth, and what drove that profit to increase? So from there, we'll use things like modeling, financial modeling, or various valuation techniques. So to determine what we think that business is worth and compare we compare that with what the market is pricing it at. So for us, research is just about connecting the dots between what is happening in a business and what is happening in the economy and what that will mean for you as an investor.
Okay, that is good to know. So, and how does your work influence investors and financial markets?
At least we are able to guide investors on, okay, what counters they can buy, what counters are we recommending for you to partake in or to invest in, so that they're able to make better investment decisions.
Okay. So now, John, you've heard Sheila talk about research influencing investment decisions. When that research gets to an investment analyst, what happens next? How do you actually use it?
So normally, that's actually, you've brought in a very good perspective, investment analyst, research analyst. Actually, just to give more color, I operate as both, to be honest. I actually don't see it as two different roles per se. They're more or less intertwined. But yes, if you're to focus solely on investment analyst strictly, that's more on the buy side, if I may say.
Mm-hmm.
For example, if someone is from the fund side and you're trying to execute, so you're going to read what Sheila has come up with in form of a report, which is what actually takes up most of our time. We are always working on a report. If you're not working on a report, you're working on another report. So you'll read what Sheila has said, and you'll try and look at the main things, since the market knows what has happened. Equity has done the results, but you'll try and see, there's usually a conclusion, more or less like the general view. Now the conclusion, the complete view of the analyst. So you just want to see what they see, and now from there, now you can act on it, whether you decide to trade or wait, reduce your exposure to that particular asset, etc.
Okay.
Yeah, so it's a very, I'd say it's whatever the analyst will release is extremely crucial. I'd say fund managers usually wait for the report.
Mm-hmm.
High net worth individuals wait for the report, and including your bosses, the bosses who have employed us, since they're also in the market, they're waiting for the report. So it's serious stuff, I'd say.
All right.
Yeah.
Okay. So now, when we hear of your investment banking is often associated with fast-paced decision making and high stakes. So, from your experience, John, what does a career in investment analysis really involve beyond the stereotypes?
Actually, to be honest, the stereotypes, even when you look at the movies, they're usually very fast-paced. But okay, if you look at Wall Street, it's this huge hall where everyone is shouting and all that. And to be very honest, it's a chaotic industry in the sense there's so much you need to internalize at a go. For example, right now we're in earnings season, and I remember they were releasing, like, there's a time they released like 2-3 banks on a single day. And on that day, someone will come and ask you, so what do we buy? Do we sell? So you see, the decision actually comes down to the analyst. Yes, you have your model, you're going to update the model, but you still you need to actually know, you need to make the call, if I may say. You'll be asked, okay, so do we buy more of equity? We're already now at 94. Do we buy more or do we exit? So it's a very high stake industry, very stressful, to be honest. I wouldn't lie to someone that it's a chill career path. Most of the time it's not, especially during earnings season. And but additionally, I'd also say that it's been a bit easy for some of us who entered the market in 2024, which is when I started my career, since we joined the market when it was actually a bull run. And you see, funny enough, as most people might not want to say it, but in a bull market, everyone is a winner. Everyone is correct, and it's easy to predict that KCB will get to 120.
Yeah.
So yeah, but it's a high pressure. You have to be comfortable with. Sometimes you'll end up working late since you have a deadline to hit. Yeah.
I understand that. So now, what is it? Something students probably think you do all day that you actually don't.
That's a tricky one. What do students think we do that we don't? I don't know. Let me open it up to the other panelists as well.
Okay, no worries. We'll come back to that because usually when you hear maybe the analyst, the investment analyst, usually think somebody with a lot of data with them, they have to come up with an idea from the data they already have. Probably maybe that's true, maybe it's not, we don't know, but we'll come back to that later.
Okay.
Yeah, so Ronnie John is looking at the investment case from the trading side. How different can that same opportunity look to you as a fixed income and derivatives trader?
Thank you so much, Lucy. I think for the trading desk gives you on the ground experience of what it takes to execute and realize portfolio outcomes.
Mm-hmm.
But at the core of it all, you also have to give best judgment to clients, especially when you are in the know of, let's say, information that may help a client make a better decision. It's not enough just to execute, let's say, a buy order. Yet I've just gotten the results from, let's say, a certain company, let's say Kenya Airways, where they've realized that a bigger loss. So I have to, step in with, the market reality. And it's part of giving an investor information such that they can realize optimal portfolio outcomes. So in simple terms, what I'm saying is, the foundation that let's say John Collins lays out in as far as giving recommendations is concerned, meets the road. Where the rubber meets the road is in the actual trading, whereby now as a derivatives trader, remember with derivatives, you're taking forward views. You're taking views that are 3 months out, 6 months out, 9 months, or even 1 year ahead from now. And you're trying to make a case for whether the situation at present is likely to persist, let's say for the next 6 months, for the next 9 months. So that takes an extra degree of care, but there's no return without risk. Yeah, so I think for clients that I've dealt with willing to delve into derivatives, it's a high risk or a high leveraged product, but the ROI is much better compared to the spot market. I think it's a promising pipeline, especially for finance students looking to get into the stock market. In the sense that you see whatever studies, whatever units you're taking relating to derivatives and forward contracts are actually are traded in real life on the derivatives market. So that's to tell you whatever you're doing is not just theoretical, or don't just take it so lightly, but take an extra degree of care to really master the payoffs, let's say to a long party, the payoffs to a short party in a derivative contract, settlement, cash settlement, futures, and even a delivery of underlying. All those concepts you're studying in campus build up and are actually executed as per your notes. So just as a note of encouragement, I think that's an opening statement I'd like to make. Yeah.
All right. Thank you so much. Many students are familiar with stocks, but know very little about fixed income securities and mostly derivatives. So you can maybe help us understand what is fixed income and derivatives, and also maybe what your role entails in all of this.
Fantastic. With fixed income as an asset class, I believe most of you are familiar with the concept of bonds, medium-term notes, corporate commercial papers, which other asset class, treasury bills, treasury bonds, infrastructure bonds. all those assets I've mentioned fall under the broader category we define as fixed income. And as the name suggests, they pay out predetermined rate of return, usually a conservative, or let's say a moderate return asset class, given that we, especially if you're dealing with government-backed instruments, actually those are the ones that offer the lowest of the buffet, in the sense that they can be deemed as risk-free, and I say risk-free in quotes because I mean no investment is in essence risk-free, but we believe that these bonds are backed by the full faith and trust in the government of Kenya. So the government has never, in fact, defaulted on any of its obligations, and the government still remains a going concern. So that's why we deem it as risk-free, or bonds issued by a government are termed as risk-free. But they are slightly more riskier with a better, let's say, higher yielding fixed income instruments like corporate bonds, commercial paper, which offer slightly better returns compared to where the sovereign, or let's say the government, offers treasury bills and bonds. Let's say if a government, the government is issuing, let's say, a 5-year bond at 12%, a company, let's say like I&M, can offer a same tenor 5-year corporate bond at, let's say, 12.5 or even 13%. So it's slightly, there's a slight premium to account for the liquidity risk, because I mean government bonds are the most liquid of asset classes compared to, let's say, a bond issued by one company, let's say like EABL or Lindsay. There's better liquidity with government securities. That's why now there has to be like that markup in terms of liquidity premium. But not to go into the theory so much of it. However, just as per your notes, because I know I'm dealing with students in the economics and finance spectrum, the fixed income class is pretty much what you'd encounter on your notes as regards the term structure of interest rates and how you derive a yield curve. We deal with all that, and we trade based on those forward expectations on where we expect those movements to be in let's say 6 months time, 1 year from now. So as a fixed income trader, what my day typically looks like is number one, talking to institutional clients. These are your CISs, that's the collective investment schemes, commercial banks, insurance companies, and first of all, understanding what are their portfolio requirements. Different clients have different portfolio requirements. Let's say banks would have greater nearer term liquidity needs compared to a pension fund, for example. A pension fund is more comfortable investing in a very long-term bond. They can even invest in 30-year bonds comfortably, but a bank would be hesitant to invest in a 30-year bond. They'd prefer, let's say, 5-year or 10-year securities, because, you know, every day people are walking into a bank, some are withdrawing money, some are depositing. So they still need a lot of cash at hand to meet those withdrawals. But a pension fund, people are saving for the long term. You are saving for 25 years out. So they are more comfortable with longer term issues. So with that understanding in mind, you come up with an ALM strategy, depending on the context that they are in. If they want to plug a liability that they have, let's say, 1 month from now, my role as a fixed income analyst is to proactively source for them a security or an asset that will immunize that liability. And when I say immunize, it's simply to get an asset whose cash flows will will satisfy or will clear out that liability a month or 2 months from now. So there is a lot of a communication exchange that, of course, takes place in the course of that. You have to make so many calls. You have to refer to market statistics. You have to look at the trading board. Pricing and timing of execution is very essential. It's very upbeat and fast-paced, as you can imagine. But I can say the value, the joy is in seeing clients' portfolio outcomes turning the green. Yeah.
Okay. Yeah. There's glamour in trading, or from what we see on social media. Is that the real life, or is just a misconception that about the life of a trader?
Well, I think there is a notion of trading that I believe is misconceived, or let me say exaggerated, especially in foreign exchange trading. Because myself, I don't deal with FX as an asset class. I deal with fixed income and derivatives. But yes, there is a notion of trading on based on technicals and looking at trading indicators, pips on a computer, which in many cases are not, doesn't really describe the real aspect of trading. Okay. Often more than not, FX markets and fixed income markets are bilateral markets. In the sense that they are quote driven. So you have to get bilateral quotes from client A, client B, client. You have to do the groundwork of talking with actual counterparties rather than monitoring screen. However, for some other markets like equities are order driven markets, in the sense that you have to place a limit price, a limit buy, a limit sell price. In those markets, yes, it's possible to trade even without knowing who the counterparty is, right? Okay. I can place an order in the computer, it will run through the system. However, what makes FX markets, maybe I can just address that, is the sense that most of these FX markets are brokered markets. So you find a broker who offers a book, an order-driven book where they market make with the existing retail clients. So what these brokers do is that they give you, they market make based on your buy or sell position. Basically, they're taking a contra position to every transaction that is funneled to them. Then they aggregate this and now deal with the larger banks on an aggregated basis. However, sometimes also another thing why I said it's exaggerated is in the daily returns aspect. Except if you're not dealing with a leveraged product, then to say that you can make, let's say, 500% returns in a day, that in my view is exaggerated, and you basically have to do some groundwork or some due diligence if at all you're entrusting that person with your funds. Usually daily returns are moderate because volatility isn't that exorbitant in that market to warrant such a high degree of return in a single day. So, but that's not to say that there is no legitimate fixed income or forex trading, or all I'm just saying is there is more nuance. There's more there's more than meets the eye when it comes to trading.
All right, that is a very important lesson for us tonight. So we can also tell that finance is not just one career. So the market can look completely different depending on where you sit. So now let's talk about how you actually get into these careers. So I'll go back to Sheila. Reflecting on your own journey, what experiences or decisions helped you transition from being a student to becoming a research analyst?
Thank you, Lucy. I'd say for me, it wasn't really a particular decision that, okay, I want to be an analyst. It was just a combination of exposure, one, and number two, being willing to just take any opportunity that's brought your way and continuously building my skills. So I'd give a short journey of how I transitioned. When I studied at Kenyatta University. So when I was in KU, I got so much engaged into associations, and I was a leader in those associations. So I thought that was just giving me that leadership exposure and that leadership experience, but it was more to it. I learned how to work with people. I just learned how to communicate effectively and be able to just manage the responsibility that I was entrusted with. So in third year, I now transitioned. I started looking for internships, transitioned to a bank where I was able to at least learn the banking operations and what goes around in the banking sector, and then later moved to telecom at M-Pesa. And I worked in a whole different industry. You can imagine now coming from finance to joining telecom. It's quite a huge difference. So I got exposure of this other side, a different side of now finance and technology, fintech. Then I eventually moved into AIB as a research intern. So I just started developing newer skills, just learning markets, learning the company and all that. So I'd say it wasn't linear. Your journey doesn't have to be linear. You know, your career doesn't necessarily have to be linear. You'll get experience in different fields. You'll be exposed in different fields. And the beauty with our course, you can be so much. So each opportunity can just give you a skill, or what do I say, or a perspective, you know, that becomes useful in your next role, because all this just build up from school as you transition to workplace. They build up and they get to impact you in the next journey that you do. So that's how I got myself to now being a full-time analyst, and I'm actually enjoying what I do.
Okay, that's really good to hear. So, but then again, as a student, you might ask yourself, what am I really supposed to do? So looking back, what would you wish or you had started doing while you are still in the university?
Well, that's an interesting one, because actually, I did so much in campus, honestly. So I'd say network as much as you can to students, get to know people, interact, dare to be, just go for those opportunities that are there. Don't be afraid. In LinkedIn, approach people, whichever industry you've identified you want to join. Go look for people who work in that industry. Go for people who work in that company. Inbox them, ask them to guide you, ask them to mentor you. And people in this industry are always willing to help you learn. That's one thing I was always told in campus. People in the working industry are always willing to, help you and mentor you until you get to a certain level. So just dare to be.
I agree with that, and we'll come back to networking because I feel there's maybe we need to talk about it separately. So, but for now, I'll just go to John Collins, and so for finance is highly competitive. What challenges did you encounter early in your career, and what lessons from those experiences have shaped your profession? Have shaped the professional you are today? Sorry.
As I said, being a very fast-paced industry, definitely the stress levels are always, your cortisol levels will be on an all-time high for a larger part, especially when you're beginning. So one of the challenges that I can really point out as I started, since actually when I joined FAIDA, what happened is I joined as a customer service agent. And then that's why I usually say any opportunity that comes around, you just have to take it, especially if it's around the company or industry that you want to jump into. So I started as a customer service agent, and then, but actually, I think I'm also answering what you had asked, Sheila. Some of the things that I think someone can do. I'd started doing the CIFA, the Certified Investment Financial Analyst course. So at the time, customer service for a few weeks, and then the analyst then, that we had two analysts at the time. The guy got an offer to another bank, and so they left. And in the process, since I had the the CFA had already started, I penyered that way, you see.
Yeah.
But now that also came with a challenge because this guy actually stuck around for like 2-3 weeks and then applied for leave, went on vacation before he could now jump into the other company. So that threw me in the deep end, and I had to perform. I had to show up, because you can't not shine because this guy wasn't there to teach me the ropes enough. You just have to find a way because this is an opportunity you've gotten, and you just have to learn. We're in that AI era, so when you get home, you don't know what a certain term you had in at the bank or you read somewhere. You can simply learn it quite easily. So I think that is one of the challenges I faced. I had to learn so much so quickly on my own, with minimal supervision, minimal guidance. Additionally, another challenge that I have faced, not even too far back, is there's a lot of scrutiny in the industry, in the sense your reports will be read, especially if you work in a top. Especially, I usually read Sheila's reports, and that is a very common thing. Actually, Ronnie, when he used to be an analyst, he's still an analyst, but when I joined the industry, he was actually a very serious analyst. So I used to look up to his reports. Anytime he releases a report, I used to read it. So there's a lot of scrutiny, and when you make a blunder, let me tell you, it's a point of discussion. People are excited to see that you made a blunder. So, and let me tell you, I've lived through it, and you just have to rise above it because it will happen. You will make a mistake, especially when you're dealing with data, you're dealing with numbers, you're dealing with multiple reports in a day or in a week. You're definitely going to get to a point where you might find that you mixed up something, and how you respond to that, and that criticism, and that you might even trend. How you react to that is what really matters, because you're here to stay. You can't be faced by small challenges. Yeah.
That's a very good lesson to learn from you, Jen Collins. Yeah. So, but I have another question. Did you ever experience rejection early in your career?
To be honest, no. Because I don't want to lie that I have experienced rejection, because actually Friday is the first place I worked. But now I remember, okay, if I could say rejection, maybe I could say I did a very extended internship, proper extended, because as you see, I joined, I was in customer service, and then so me coming into the bank, I wasn't really going into the research side. I had come in as a customer agent, since that is where there was a gap. And so making that jump now to full time, or rather being what do they call it in HR, being absorbed into the company, took extremely long. I had to fight. I had to convince. Yeah, had to be convincing enough. So that's what I can say. And sometimes you might feel like you want to give up and get another offer somewhere else, but as long as you see what you're working towards and the kind of company you're working towards joining, then I think you can just overlook the delays.
Okay, what I'm borrowing from you is a very valuable lesson, because you see, mostly when you're a student, you expect maybe when you're finished with school, you would get a job automatically with the title that you want. But you are telling us that you start where you get a good position and you can see a future in that job.
I think I can even add on to that. Even when you come out of campus, most people are not willing to pay you properly.
Mm-hmm.
So I did an extended internship. I'm not saying I was being paid badly, in quotes. Just that you might look at the kind of work you're doing and the value you're bringing, and you feel like I should be paid more. You see, and now in the process, you might abort something that potentially could have been quite good. So sometimes I feel like money is not really important in that sense, especially when you're starting off. Focusing on skills, and if you're around people who can really propel you and teach you, look at it from a 2-year, 3-year perspective, the money will still come. Yeah.
From what I can tell, it's a promising career, so being patient is also part of the job.
Yeah, definitely.
All right, so now let's go to Ronnie. Trading requires making decisions under uncertainty, risk, and pressure. So how did you develop the confidence and discipline needed to thrive in such an environment?
Thank you for that question. As you put it, yeah, it's trading in a sense is very demanding of your time, energy, consistency, concentration. Especially in a quote-driven market such as our Kenyan market. You have to speak to so many counterparties in a single day. It's hardcore sales, if I'm just to be outrightly blunt. All the elements of commerce are at play, negotiation. You have to, there is also bargaining that's taking place. You as a dealer or as a trader, what I'm coming to do is to bridge the gap between the seller and the buyer. So the seller starts from the ceiling of heaven, and the buyer is starting price is at basically the hell's floor, and you have to bridge that gap, bring them all down to earth, you know. So it's an arduous task, I can say. Sometimes you even forget to take your lunch meals because you're so caught up in it. But you just have to keep that disciplined approach. At least I tell myself that, in the sense that you have to take care of yourself as a professional. You still have to invest in yourself, your knowledge, inventory. You have to stay updated with the market trends and developments. You have to rest. You have to not always take it from a commercial angle. It's more relationship based than commercial based, if at all, if it is to be a lasting practice. That's my approach, such that as a trader, you basically trying to add value while building relationship, such that it's not you are not after just one transaction and that's it. You are after that lifelong partnership, such that if at all I'm calling the treasury desk at say bank X or bank Y, they'll pick up my call, you see, because you actually interested in portfolio outcomes. So you are keeping track, you're updating them with market developments, any news that are coming in, you're keeping them updated, such that you're building that trust. Because actually in the finance world, trust is the capital on which all commerce is based. It's the fuel, it's the engine that drives transactions, and as such, you have to keep that at the back of your mind. You have to stay true, and you have to act with integrity at all times, and you have to be consistent. There's some, of course, you have to. It's okay to take leave, some time to rest and recharge and renew, then come back to the market. Because the market is not going anywhere. It's always gonna be there. It's always gonna be competitive. But what matters is, are you enhancing your value? Because it's a very competitive space. If you are not equipping yourself with the necessary knowledge, the necessary technique, if you are not giving sharp pricing, then it won't be a surprise if, let's say, you are undercut or you lose out market share. So it's a practice that I think sharpens over time and gets better the more you do it.
Okay, I was even to ask you about how you reset, but you mentioned about taking leaves and all that.
Yeah.
So I wanted to know, is discipline something you naturally had or something the markets forced you to develop?
I think it's been so far how many months in trading, active trading? It's been 8 months now. I used to be an analyst, as John Collins put it. We used to give recommendations, write reports. But just at the start of this year, I jumped into the world of trading, which is it's an extension of research, really, because now we are actually moving from recommending to actualizing portfolio outcomes. So I can say the 8 months has been super terrific in terms of the learning curve. I mean, you're jumping into a very competitive world, very fast-paced. So the first few months, I was almost drowning in the chaos of it all. But you have to find your footing before the market, takes you out of the game. So you have to have a disciplined approach. I think that's something I'm establishing. I have mentors. I'm not doing it all by myself. I have mentors who give me tips of do's and don'ts, which also help me sharpen my practice. So I can say I'm getting better at it. And that's just to give you courage. If you're a student, don't think you have to wait until you're a certain age to start making an impact. I'd say the right time to make an impact is from the moment you get the opportunity. Let your work speak for you. Give the best quality the market has ever seen. And people notice. People will notice. If you're writing reports, make every report the best you've ever written. Let your next be the best. Have that as a philosophy, and slowly but surely you look back at some point and be like, wow, if you told me we would have accomplished all that in, let's say, a year or two, I'd say you're messing with me. So you really have to get to that point where from the moment you get in your first opportunity, you're very proactive. With every opportunity you are entrusted, you give it your best quality, and people notice. You'll slowly get opportunities you'll be entrusted with bigger responsibilities. You get opportunities to represent your firm at bigger events, because you've earned the trust. You've earned the trust of your employer, and I think that in itself is a signature or is a sign or an affirmation that you are actually growing. You're getting, even now, you get to a point where you're getting job offers without you even applying, because the quality of your work really screams in the market. Yeah. So I think that, just as a word of encouragement, let your next be the best.
That's wonderful. Now let's talk about these opportunities and preparing as a student. So on this one, I'll start with John Collins. So what opportunities, internships, certifications, competitions, or even extracurricular activities would you recommend students to pursue if they aspire to work in investment banking or even financial analysis?
I think from the top of my head, number one, I think if I was to go back, I'd just focus on financial modeling first and foremost, and then try and understand the markets. In the sense, I mean, understand where stocks, where are stocks, not just in Kenya. Understand a bit of different markets. Even FX is not bad. Actually, before I came into Faida, I was actually trading FX at a personal level. In terms of academic preparation, any course that is aligned to financial analysis, but is recognized, that is CFA, CFA, FMVA. I think, and you see all those, they are closely tied to financial modeling. So you see, you can have the certificate, but if you can't actually model, then it becomes a problem. competitions, I think I've seen one that is very popular. There's this one called Imara. I'm not affiliated to them. I have just seen it, and I think it's one of those financial modeling competitions that is really doing well. And I've seen people actually who were in that competition end up getting offers in the industry. So I think it's actually something that someone could look at. Internships, I think banks usually announce when they're having that. Though one thing that, to be honest, the industry is so niche, it doesn't happen a lot, to be honest. It doesn't happen a lot because the number of people in the industry, it's very cyclic, cyclic. And so when it happens, it's something, you just have to be ready for it. You have to be ready for it. And yeah.
Okay. So now I hope we are taking notes on what we can do to get us to the next level. So for you, again, John Collins, suppose you have two graduates. One has excellent grades, but no practical exposure. The other has decent grades, but follows markets, participates in an investment club, and can actually explain what's happening in the economy. Who gets your attention?
Yeah, definitely the second one, because you see, part of the job actually is, you see, someone who understands the market, someone who can actually communicate what is happening in the market in a boardroom or to a client. Doesn't have to be a high net worth client, some random client who came in and wants to speak to someone in research. Someone who can communicate, someone who is actually passionate about the industry is actually a better fit than someone who purely just has good grades but zero market knowledge and zero soft skills. Actually, soft skills are, I'd say you need to have mad soft skills. You need to be able to present, you need to be eloquent, you need to speak before people in a boardroom. For example, there are some people who have come and your bosses want you to tell them about the macroeconomic state of the country. You need to be smooth with your words, and that actually contributes quite well in your rising in your career. Yeah.
Amazing.
Expressing yourself. Yeah.
Yeah. So Sheila, for students interested in equity research or financial analysis, what technical and analytical skills should they begin developing while still at the university?
Thank you, Lucy. I think I'd divide it into the technical skills, as John Collins mentioned, and the communication skills. So the technical skills in terms of financial modeling and, just being comfortable navigating around Excel, and not just the basic Excel, but being able to just analyze that data, build models, and understand, how different financial statements connect. So from the technical skill side, you also need to be able to learn how to communicate what you found. You have to learn how to communicate your analysis. So if Excel gave you this, if you got to like this target price of this maybe discounter that you are modeling, are you able to communicate how you got to that, or a justification of that, maybe that price. Another thing I'd also encourage students is to just learn financial statements, start as early as you can, especially financial modeling. Learn when you're in school. I believe there is so much time when somebody's in campus. So just take that time, go to YouTube, search for financial modeling classes, start modeling as early, because I think because even in our industry, you keep on learning every single day. You'll be maybe good at banks, and the next time you're learning about telecom, you're modeling Safaricom. So the earlier you start, the better it becomes for you. If you eventually will come and join this career. So just learn to analyze, and also learn how to communicate what you've analyzed.
So you're telling the students, if, for example, you wanted to be employed, to be employable in the next 6 months, those are things to pay attention to.
Yes, as well as the certifications as well. Just make sure in that room when you guys are going to be interviewed, make sure you're the best. And that comes with you being out there, being in associations, being involved in association, learning the skills. There's a whole difference between somebody who's just studied, he has the papers, he has first class, and another person who's, taken that step of actually learning the skills and doing better. Because you can even come and present to your employer and say, I modeled this, and it will be easier for you to actually join the workplace than somebody who just has a certificate. Yeah.
That's really good. So Ronnie, we are back to you. What knowledge or practical exposure would you make a graduate stand out when applying for roles in trading or capital markets?
Come again with the question.
What knowledge or practical exposure would make a graduate stand out when applying for roles in trading or capital markets?
Okay. I'd start first with the theoretical foundation. I wouldn't underestimate the studies and the theory. The theoretical background is very, very key. Actually, it's the most practical of tools you can equip yourself with. In as much as it's theory, it's very practical that you really master it. Secondly, I think I cannot overstate how beneficial being in associations such as myself. I was in Kenyatta University. We had the Kenyatta University Economics Students Association. And through it, we were able to get experienced alumni come to talk to us every now and then. We'd go for corporate visits every now and then. We'd engage in meaningful discussions around capital markets and the economy at large almost every week. And I think the more you immerse yourself in that world, the easier it becomes to transition into the world of work, because you've already prepared yourself mentally for such conversations. So I'd encourage you, if you're still within the course of your studies, to keep abreast with economics associations, any inter-university debates, competitions. They go a long way, because sometimes you find corporate sponsors looking for graduates directly from university. And just by virtue of you being there, you may get opportunities just because of that. I've known so many, like, it's actually a pipeline. It's actually a pipeline where employers can source ready graduates. So yeah, opportunities need to find you ready as a learner, such that the transition is smoother for you. You get to hear of opportunities when you're in such associations, rather than when you're outside. So mine is just to commend you, even just for sparing the time. You could have been elsewhere. You could have been hanging out or whatever students do. I mean, you'd be doing anything really, but you chose to sacrifice your time and listen in. So yeah, just hanging around such conversations sets you up for something even greater. So yeah, and even as alumni, whenever we are invited for such events, be it economic symposia, yeah, we try show up and connect with learners who show up, such that, yeah, there's that continuous mentorship. And on a personal level, I wouldn't underestimate the need to have a ready CV. You need to also build your own voice gradually using professional platforms like LinkedIn. You need a professional profile. You need to embody thought leadership on matters of economic relevance. Since you're training to be economists, that's something you can take up. There is actually a dearth of thought leaders. Many of us are just consumers, when in reality we are trained to be proponents of economic thought leadership. So you don't have to wait till you're of a certain age. You don't have to wait until someone gives you the authority to do that, but you can start embodying thought leadership right from this instant. Creating a professional profile on LinkedIn, giving commentary on where you expect the economy to be, indicators around inflation, indications around interest rates. Yes, maybe at some point you may look back and be like, okay, what was I saying 6 months back? But you'll notice the growth. Actually, you yourself will notice the growth over time. In the way you analyze scenarios, that will improve over time. So don't be afraid to embody thought leadership from a young age. That's something I can also position, because you have to make your own, you have to create your own space in the world, so that the world makes way for you as you tread your career path. Another thing is keeping an eye out for opportunities. It doesn't have to be in the investment banking space. There's so many other avenues where economists really flourish. Public sector, private sector. In the public sector, every ministry needs an economist. Every parastatal needs economists. To the NGO sector, NGO sectors cannot operate without an economic cost-benefit analysis breakdown with any project they want to undertake. Project management also infuses a lot of elements that economists also make a very significant input. So you're in a career line which gives you a breadth of options. In the private sector, investment banking is just one of the subsets of fields you can find yourself in. So whichever field you are so passionate about, just do more research about it. Prepare your CV in tune with it, in tune with the industry you wanna situate yourself into, and do also you can take on professional courses that build up, that add some value to what you're doing at undergraduate level. Because I mean, you have to ask yourself, if you're in an interview panel, you're, let's say, 10 candidates, you're all eyeing the same role, right? What will make you stand out, really? When the rubber meets the road, you know? Mm-hmm. You may find someone who just started, a candidate who showed that they have started a professional course. They've not even sat the exam, but they are in the process of studying for a professional certification, gets the edge over all the rest, because you're adding an extra layer of value. You're building your knowledge inventory. You're not stopping at the bare minimum. That's now the advice, I think. If you try embody all these characteristics, you'll be way ahead of 90% of others, really. Yeah, you stand a better chance.
It's a very important advice to our students tonight. Now, I want us to go back before we proceed. And this is what Sheila mentioned about networking and connections. So how important are they really? And can someone who doesn't have any kind of connections really make it?
Oh, so, myself?
Yes, and then we go to Sheila. We start with you, then Sheila.
Okay, I think networking also has its place. In as much as, yes, I was stressing the importance of building your own knowledge inventory. Mm-hmm. Networking also adds a layer of value, especially now through the professional associations I was talking about. Usually opportunities are circulated around associations such as this. You meet an alma mater who find themselves in, let's say, NGOs that are looking to hire economists, or investment banking alumni who are looking for interns in the research teams, trading teams. And just because you've been there, just because you are there at the right place at the right time, opportunities meet you. So yes, it's good that you try and spend your free time in in professional associations which and events which connect you to industry participants, and in that way you're able to learn how to meander your way into a first opportunity, because that first opportunity sometimes is all you need for you now to work around from there. So but all in all, I think the very core, it should be your understanding of theory, your understanding of the applicability of what you're studying, understanding and knowing that whatever you're studying is really relevant. Don't discount it. Don't discount the knowledge you're getting. Don't discount the assignments you're doing. They actually build up to something. Yeah, I think that's what that would my take really. Yeah.
All right, so let's hear from Sheila.
Okay, I really loved this aspect of networking. I'd first start by saying everybody's journey is different. People are different as well, can be introverted and extroverted, but just dare to be and put yourself out there, as Ronnie mentioned. How I got to research is a very funny story, because I'm even honored to share a platform with the person who really held my hand and worked with me. Ronnie brought me actually to this side of research. He's the one who gave me my first internship, and I transitioned to being an analyst later when he had left the company now. And I remember how I got it. He mentioned about joining professional associations like Economic Students Association, Kenyatta University, UN. I'm sure you guys have an association, Accounting Students Association. And I remember in the planning of the events that we usually plan for students, because what these associations do, they bridge the gap between the corporate and the students, and then they bring corporate to students to be able to mentor and guide these students. So in the process of planning for the economic symposium that usually is done annually, we happened to, Ronnie was an alumni of Kenyatta University, so we approached him and we were like, we'd like them to come and sponsor the event. So when we came for a meeting now where the office is at, as we were leaving after now the meeting and everything, as we were leaving, I just happened to ask, does your company offer internship opportunities? And he told me, yes, we actually do. If an opportunity arises, I'd be glad to tell you about it. But just share your CV for us to just be ready with that. And he mentioned about you being ready. I sent the CV there, and then before I even got to school, I shared the CV, and months later, that's when I got the OETO. He called me and he told me there's an opportunity. I applied, I went through the interview process, and that's how I got to venture into now research. This was not somebody that had said he's my uncle or somebody in my family, my cousin, but that power of networking, he just saw something and he gave me the opportunity. So that goes to tell you that people in the corporate industry believe in young people, the young generation. Go to those CEOs. Just don't fear approaching somebody. Ask and you shall get, to be honest. Put yourself out there. Be very active on LinkedIn. Network as much as you can in these events. Make sure you interact with every person that comes to this association. Just say hi, even a simple hi. Compliment someone, it goes a long way. So that's my take.
Oh, nice one. So Matthew 7:7, ask and it shall be given.
Yes.
Yeah, okay. So now back to John Collins. So we are constantly telling students to get good grades, and they should. But once you sit across the table from an employer, how much does the transcript still matter?
That's a very good question. I'd say it matters when we're dealing with a pool of people and they need to cut down on the numbers, so they can narrow down on having a few people. Because definitely they're not going to interview 150 people for firms such as the ones represented here. They usually just deal with the number of people who could be coming for an interview could be like 5, maybe even less, maybe even 3. So good grades definitely. As I said, these certifications are to get you, through the door. At least one leg, mguu moja, at least you manage to be there, and then now you can fight for yourself from there. So definitely, it's a plus, because I remember my dad telling me in campus, make sure you get nothing below a second upper. Ukipata anything below second upper, now you will now find your way to just push yourself in life. So definitely, it does help, because most people have gone to school right now, and the market is very crowded. And so definitely, if you can actually, I usually say, you have to use whatever it is that you're gifted with. If you're extremely smart and you consider yourself a genius, then double down on the brain, double down on the certifications, double down on everything that is close to an exam, because definitely you will bag it. Yeah.
That's very good advice. So now we've talked about getting into finance, but getting into the industry and actually succeeding in it are two different things. So we'll finish. I know time has moved. We're supposed to finish by 9:30. So we go a little deeper into experiences behind these careers. So to start now, I'll start with Ronnie. Financial markets can be unpredictable. Could you share a memorable trading experience that taught you an invaluable lesson about managing risks, discipline, or decision making?
Thank you, Lucy. I think, yes, as you characterize it perfectly, financial markets are unpredictable. This was more true this year. I think both Sheila and John Collins know. I think this year has been a roller coaster of volatility. One time the markets are looking so rosy, things are looking so good, markets on a bullish trend. The next minute, Donald Trump makes a tweet, and suddenly markets are going haywire. I think at the time, I recall there was a time when Trump introduced tariffs, unilateral tariffs to all countries globally. I think the least tariff rate was 10%. The highest, I think, was 80% to Chinese imports. That induced a lot of uncertainty and volatility. Forward inflation projections were through the roof. People expecting interest rates were gonna go high at some point later this year. Portfolio managers were panicking all through. We started to see panic sell-offs, including myself. I think I panic sold at that time. I think I was in April. You're like, oh my, things are gonna get so ugly. Just sell everything right away. I remember that happened on a Thursday in April. Then by Monday, Trump came back again, revised some of these tariffs to more moderate figures, and financial markets were back up again instantly. So I recall that time, myself and several of my clients had made some reductions in the portfolio allocations, even at losses, just to avoid bigger losses. However, the markets sharply recovered a few days later. So those were missed opportunities. And I think at that time I learned that, take a long-term perspective. Sometimes things are just market noise. You don't have to act on every impulse. You have to get like a disciplined, longer-term perspective to trading as well as investing. So I think that was one core memory I had back in April that still shapes my practice to date. And I think the market has also caught up to that as well, in the sense that, we've seen some more conflicts in the Iran region, Israel attacking Iran. Supply chains are disrupted around the Strait of Hormuz. In as much as, yes, oil prices soared through the roof, it's been on and off. A ceasefire being declared, then a ceasefire being violated a few days later. I think the market as a collective has come to the conclusion that these shocks are going to be what I can describe as a new normal. Or volatility is gonna be the new normal. That we may not have a scenario where we have a absolute certain environment. And as such, I think investors are now looking beyond all this short-term noise. That explains why even our domestic stock market is still on a bullish trend to all-time highs, despite the geopolitical chaos in the background. Yeah, so I think that's one core memory that I think I carry with me all through to date.
Okay, that's amazing. So we go to John Collins. You've likely evaluated countless companies and investment opportunities. When analyzing a business, what indicators immediately capture your attention? And what common mistakes do young analysts often make?
I think I'll comment on. So recently, I've been looking at some companies outside the NSE. So something I've noticed is that, particularly on the corporate papers, or rather bonds that are issued by private companies, you'll find that it's actually easy to evaluate listed companies since regulations are very tight. They can't just give out shareholder loans recklessly like what you usually hear in circles, and the entire company goes under because these guys are holding, serious amounts in loans which they never pay back. They actually spend in Westlands. So now, for these private companies, you find that there is so much of balance sheet items. There's a certain loan that is likely to materialize, or rather, maybe there's a litigation that is likely to materialize. Actually, that also touches on listed companies on the NSE. We recently saw Stanchart, the pension case that finally was closed, and these guys had to pay up almost 5 billion Kenyan shillings, which ended up causing the stock to drop. So some of these things that are not yet very solid in the books, but are contingent, is something that you really have to try and price in. But you see, the issue with some of these things and why it's hard to analyze or even put in a report is because your report will just have that thing there for 10 years because the case might run for 10 years. And so, yeah, you end up not putting it there, and eventually it happens, like Stanchart. So that's the thing. You just have to have it at the back of your mind. And for such matters, whatever it is that you see that could happen, this is now about contingent liabilities, just see the value. If the value is not that big, then ignoring it is okay. But for serious amounts, that's when now you have to look at it. What we look at personally, so on the investment side of analysis, informing decisions, that is now on the fund management side, I'm very skeptical against companies that are not profitable. If you're not making money, I don't operate with hope. I really like to see the revenue. I want to see the bottom line. I want to see a healthy company. I want to see cash flows are there. I want to see that cash flows from operations. Those of you who have interacted with financial statement analysis, we want to see the numbers are healthy. So sometimes you see someone trying to defend a company that is in deep reds, and there is no way. If you're making losses, I don't see where the future is. There is no future here at this point. Yeah. So when you're looking for companies to invest in, it's easier to select companies that are making profits, companies that have steady revenues, companies without scandals. So it's actually not complicated. It's actually the basics that you just have to use, and don't be very hopeful. Focus on the numbers, and be very data driven. Don't listen to the management optimism too much.
All right. So what is the one red flag that immediately makes you question an investment for a company?
Off-balance sheet items,
Mm-hmm.
and then crazy debt. And then if you now look at the interest cover, so these are some of the ratios. Interest cover is not making sense. Debt service coverage ratios, they're not making sense. So that is one of those things that easily, slowly creeps into the company's going concern. And eventually you find yourself in very ridiculous holes where you find the total equity is a negative 100 billion. There's a company like that on the NSE. So yeah.
All right, thank you so much, John Collins. So go back to Sheila. So our research analysts are expected to separate market noise from meaningful insights. Can you share an investment recommendation or research project that significantly influenced your thinking and what it taught you about making sound investment decisions?
So I think one thing that might have significantly influenced my investment decision is just seeing how important it is to look just beyond the headline numbers. Because when you start in research, you'll easily see, like you'll see a company reporting strong profit growth, and you're like, wow, that's a positive story for the company. But I think as you grow over the years, you just start asking more questions. Is this growth recurring? What is happening to the margins? What is driving the earnings of this particular company? Yeah, I think I'd say that. So just looking beyond the headline numbers.
All right, I see we have less than 15 minutes to finish to wrap this up. So I'll just be quick on the final round. So, but before we get even to that, I wanted to know now the money question. So finance somehow has a reputation of being well-paying industry. Should money be a reason for choosing a career in finance? So I'll start again with Sheila, then we go to Ronnie, and finally we finish with John Collins.
Liz, do you mind asking a question again? Sorry.
So finance has a reputation for being a well-paying industry. Should money be a reason for choosing a career in finance?
I'd say no, especially as you're starting, because I think the key thing when you're starting your career is just learning and growth. But eventually that growth and that money always comes through as long as you've mastered the art of what you're doing and you're good at what you do. So I wouldn't say more about money, but just focus on the skill of learning and growing. And money always follows. There are some who will be lucky to, just start high and, you learn as you're earning well. But there are others whose journey will be, slow, but sure.
All right.
Just look at the money, look at the experience and the benefit you're going to get in the long run. Yeah.
And let's hear Ronnie's opinion on that.
Well, I think money, yes, is one of the reasons why you should consider finance. Mm-hmm. It's certainly a rewarding career line if you really do it well and consistently. But as Sheila puts it, patience is also part of the equation. It's a long game if you look at it. I thought Dominic wanted to add more on that. But yeah, I think money is a good motivator as well, but it's one-off. I think money is an outcome variable of the right elements, of the right independent variables. The independent variables being your work ethic, your patience, your consistency, your discipline, your creativity. All these ingredients make money an outcome. So I'd say yes, make the money, but don't chase the money. Do the right things that make money attracted to you really. And how you do that is by enhancing your value to the market. That's what makes money come to you.
That's a really valuable lesson there. So because I see we have a few questions and also time is not on our side, I want John Collins to answer a different question. So we have AI these days, and now AI can analyze financial statements, process huge amounts of data, and generate investment insights very quickly. What should a young finance professional be learning that technology can't easily replace?
That's a very good question. I think, if we finish this discussion without mentioning AI, then we'd have that would a mess. So AI, to be honest, I use AI on a daily. I don't think any of us, even Ronnie and Sheila, I think it's something that anyone who is consistently in corporate and you're doing a lot, you definitely have to use AI. And actually a paid version of AI, not just the basic one. So first of all, when it comes to using AI, you can't use AI if you're not already competent in whatever it is that you're doing. It will somehow show. You need to know, first of all, analysis so that you can actually know how to prompt AI. Yeah, so it doesn't really remove the need for you to actually first master analysis, research, and all that, modeling, and all that. And then, but now, yes, I've seen actually if you check on Instagram and TikTok, you'll see, you know, people talking about how this prompt can give you a whole research report, earnings note on Nvidia, and it's actually doing a ridiculously good job at at a very fast pace. In like 2 minutes, 3 minutes, 5 minutes, you could have a very in-depth report. So, but now you see, as I said, you knowing what you're looking for will make you a better prompter. And will AI really come and replace, for example, my role? I don't see it happening in 5 years. Even 5 years, I don't know. It's not really likely to happen that fast. It's not really likely to happen that fast. But yes, it's something that's a risk. It's there. You should have it at the back of your mind. Um, I think that also brings up the whole quant angle, and something I really wanted to bring out is, if you look at, so our Kenyan market is not as developed as the rest. Even in Africa, if you compare our market to JSE in South Africa, and now the US, you have crazy banks there, Citadel, uh, Jane Street. These guys do high frequency trading and all that. And I see now this is also AI and technology, and how that uh, connects into finance. It's something you have to think about. Definitely, positioning yourself to take up quant roles in Africa, not just in Kenya, is something that I think you can work towards. And now that brings up the whole coding idea. And you see, for you to actually code properly using AI, because I know everyone who codes uses AI right now. I think I saw a question on computer science. So you see, you still have to be an expert first before you can actually vibe code. Yeah, you need to know what you're doing.
All right. So you can also you take advantage of AI to the maximum.
Yeah.
All right. So Sheila, what do you like the most about your job?
That's a good one. I think one major thing that I really like about it is that I'm constantly learning. In this field, you're learning every day, every hour. There's so much to learn in the industry. Even if you have 10 years experience, you'll still continue learning. And the fact that you're able to share different views with different analysts. I read reports from John Collins in FIDA. So you're able to question and just ask, how did you get to this? So also just interacting with other analysts, and also getting to be at the forefront of getting to understand the listed companies. Maybe when you go for the investor presentations, you're able to understand if it's Safaricom, what drove this, what are they saying about the Ethiopia. So constantly learning is the major thing, as well as interacting with different analysts to get a different view of the market.
All right. So still on you, Sheila, if you could go back to your final year in campus, what would you do differently?
That's a good one. I'd learned financial modeling.
Nice. Okay. So I hope we are taking notes to see so that you are more marketable out here. That's a good one. So thank you for that. And now to John Collins, one piece of advice you wish someone had given you when you were still in the university.
One piece of advice when I was in uni, I'd say knowing what you want early enough. I think I didn't know what I wanted to. I actually never knew I wanted to be an analyst until like I think my final year. So if I knew that I wanted to get into finance and specifically investment side, this is research, what you're talking about, I think I'd have made more moves, skill wise, modeling and all that, which would have made it easy for me as I just start my career.
All right. So now I hear Ronnie is a mentor to many. So I want maybe Ronnie, you can tell us. There's probably someone listening tonight who wants to work in finance, but doesn't think they are good enough. Maybe they don't have the right connections, the right background, or they don't think they're strong enough technically. What would you say to that person?
I'd say to that person unsure of whether they have the right connections, whether they're gonna get an opportunity. I think to the extent you focus on their immediate locus of control, and what can you control? You can control your ability to master your theoretical content. You can control the environment you associate yourself in.
Mm-hmm.
To the extent you do this, then you're setting yourself up for them. And actually, the other point I added earlier, the need for you to create your own voice early enough. I think there's one analyst I saw doing this really well. It's actually a guy I mentored. Let me see his name. Just a second. Yeah. I think Sheila, you know his name. Kelvin, what's his other name?
Kelvin, I think Kelvin.
Just a second. I'm just giving him a shout out because he's someone I know who started creating his own voice, and he actually found himself being in an investment bank because he created his own LinkedIn profile, started commenting on macroeconomic issues, giving forecasts, and just because of that, he's embodying that leadership in his own person.
He's Munya.
Kevin Munya, correct. You can just look him up on LinkedIn. I just admire the kind of that leadership he's embodying, and he's not waiting for anyone to give him permission to do that. Yeah, he's just looking at macroeconomic issues, using the theories learning to dissect, give his input, and you find people following are actually people making relevant policy decisions, relevant portfolio management decisions. And they didn't wait. He didn't wait for anyone to give him the permission. He didn't believe he was too young to do it. By the virtue that you are university trained, you have that backing, you have that theoretical foundation to make advisory, to give recommendations on policy, and you look back and you'll be like, wow, I didn't know we could get this far. So as a parting shot, in the interest of time, the more you focus on the elements you can control, the better will be your result or your outcome. So you really don't need to doubt yourself. Believe in yourself. Believe that the world is working in your favor. Believe things are falling in place. As long as, yes, you're putting in the work, and things will work out.
All right. So now I'm reading some questions on the chat. We have a question for Ronnie. To Ronnie, based on portfolio, this is from Robert. Based on portfolio analysis, what can you tell clients who have an appetite to trade or invest in it?
Okay. Okay.
I feel the question is
big. based on portfolio analysis, what can I tell clients who have an appetite to trade or invest? I mean, each client is different. It will, of course, depend on the investor's time horizon, liquidity requirements, risk appetite, which varies from one client to another. So there's no uniform answer to that question. It varies based on specific client needs.
All right. So did any of you use an accounting? This is from Joshua. Did any of you use an accounting background, a CCA or CPA, as a stepping stone into investment analysis or trading? Or is that an unusual route? So does any of you have any of those that are a CCA or CPA? Joshua wants to know whether it's something that you've used as a stepping stone or it's an unusual route.
I can't say it's unusual. I know very many CPAs who are in the investment world, so it's not an unusual route. CPA also is a good route towards really getting into the analysis, because a lot of the trading relies on financial statement analysis and making forecasts around a growth expectation. So yes, it's a professional course that is a stepping stone, I can say. Another one that you can consider more finance-oriented professional courses like CIFA, which is a Kenya designation, and we have CFA, which is the global accreditation version of the CIFA course.
All right, maybe John Collins, you can help us with the question from Eric Omondi. He's a computer science student with a strong interest in fintech. So he's fascinated by how software powers trading, risk management, and digital finance. So, and he's looking to explore opportunities where he can learn and apply his technical skills, whether that's building data-driven tools or AI-driven financial solutions. So he wants to hear about the kinds of platforms or softwares you use on your daily work and where you see the biggest need for innovation.
Actually, I think I'll try and answer it partially, and then I'll leave it to Ronnie, since he's the guy who is in the trading side of things. But I think the NSE PLC is also is a good place, is a good company. So since you see that's actually where they actually, okay, let me give some more information. So NSE is actually they've gotten a new trading system. So their old one is being put to rest. I don't know which term to use. So they're getting a new one which will have better features such as fractional trading and all that. So whatever you're talking about, I feel like it's closely tied to a fintech company, which NSE more or less you could argue is within that scope. But in terms of the tools we use at work, I think the question is the tools that are used in the Kenyan market. That is Bloomberg for information. Then now for the Kenyan market, we have is it called ATS? I think now Ronnie can come in there in terms of what we use here locally.
Yes, on the local scene, there are a variety of technical software that the exchange, the Nairobi Securities Exchange, relies on for trading. But that doesn't mean it should limit your creativity by any means. Insofar as coming up with risk management software, there's plenty of gaps in the market. The gaps on portfolio management software, there are gaps on communication interfaces, which I think are low-hanging fruits. You can plan around. I think there's that gap in the market value proposition that you could consider working around. and bringing it to markets.
Thank you so much. I hope we have answered Eric. I'll take the final question from Cyrus. This is addressed to John. What are your thoughts on retail trading? Said you were trading FX before joining a firm compared to institutional trading.
That's a good question. So the FX market, you're more likely to fail than succeed, first and foremost. And I think that also applies to the various other markets, whether it's futures, options. So it's different in a sense. Higher risk management procedures, are in place. There's no guesswork. You have to have a track record, a verifiable track record. And actually, if someone is out there and they think they are good at doing these things, trading and all that, you simply need to have a verifiable track record. My FX book has such features that can, you can't just say I'm a beast trader. I can give you 1,000% in a week, and you can't really verify it. So there are third-party softwares that you can use to track your performance in a verifiable way, authentic, that you can go before a CIO and tell them, I've done 45% in 2026 year to date, and I think I can be of value to your fund. So if you have the skill, I think that is something you can, pitch if you have verifiable results. So that's the thing. You just have to have verifiable results.
All right. Thank you so much, John. I hope, Cyrus, we've answered your question. We've run out of time, so I want to take this opportunity to give each and every one of us to say a final word, and then we'll be ready to close. So I'll start with you, Sheila, then we go to John, and then finally we finish with Ronnie.
Thank you, Lucy, and to the whole KESA. Thank you for giving us the opportunity. We've enjoyed, and it was a bit interactive. I think one thing I leave with the students, another thing you can learn also is financial literacy. Because I believe in campus, most people have a lot of money, but you don't know where to place it. Start trading, start investing as soon as you can. It's quite a skill that people don't understand. So when you get in the job and you're given your first salary, it's a lot of money. You don't know how to plan it. Just learn financial literacy and know where you'll be able to just allocate your money and invest your money. Thank you.
Thank you so much for the opportunity, and thank you to KESA and to the members. And it's a pleasure meeting you, Lucy and Sheila. Ronnie, I've known the guy for a while now. So final note is, what I'd actually say is, don't limit yourself to investment banking, to be honest. There's so much out there. And there's a question that had come up. If you're looking for the money and your focus is heavily on the money, look at all the positions that are there in the investment banking space, and also look at consulting, look at, so what I'm simply saying is that there are so many roles you could actually take up as an analyst, since if you're doing economics, yes, and analyst is more or less the entry-level role for all of us. You could be an analyst at a rating agency such as Metropole. So there's so much that you could do. You could be a business analyst. You could be an equities trader, bonds dealer, stroke trader. You could be a research analyst. And so there's so much. So just do a lot of research before you narrow down on saying that you want to be a research analyst. Find out, what does it look like? Look at even the money. I usually say the field that Ronnie has joined right now, which is heavily commissions and sales driven, that is low key where the money is at, to be honest. If I can just touch on the money a bit more. Even Lucy knows that, since she's also in the sales side of things. So look at the whole thing before you can commit 10 years into the career. Yeah, thank you for the time.
Thank you, John. I think as a parting shot, first of all, thank you for sticking with this all through till now. It is my hope that you've learned something, even if just one person has been impacted from this talk, then I think it's a win in my books. Never stop believing in yourself. Never stop investing in yourself. And I believe it's a world of abundance. So don't be scared that you may lack opportunity as much as you may not be fully prepared when the opportunity comes your way. Let that be your driving fear more than the death of opportunity. Yeah, I think we've said it all. Over to you. I believe in you guys. You can do it, and whichever field you're drawn to, I believe you have what it takes to prosper and flourish in any field. Thank you.
All right, this has been amazing, and I see we have two hands up. So I don't know if we have time for that, but maybe we can be brief. We start with Kevin. Okay, so Kevin is not speaking, so we go to Bakita.
Sorry?
All right, we can hear you, Kevin.
Yeah, actually, I'm very impressed that, actually, I'm King Kevin. So, I've heard we are talking about trading, and actually, trading is more of whatever it entails, whatever we have been doing. But in most cases, we have been always told trading is just a way of maybe transaction of tangible goods. But trading involves a lot. It involves even trading of the services. So first, before you get to any trading, try to also get some kind of knowledge about whatever you are going to trade. Doesn't only matter with education. Sometimes you can source your knowledge by yourself. So if you source knowledge by yourself, then that's why those who are doing economic and statistics, you are quite good in this thing, because by economics you can learn the terms of trade, you can learn which sources of trade. Then in a statistical way, you can analyze. So this one you can analyze by the trends. There's some trends you can see. There's some things you can foresee. You can predict. There are some things when it changes, like when we see in the monetary policy. There's some things when you hear from the monetary policy angle, you definitely know there might be an increase in the bond part of it. So these ones are what I would advise for the sake of the time. Thank you for the chance.
All right, then we have Brian.
Well, Lucy, thank you for the opportunity. Mine is just to give you a pat in the back for giving us your time, from your busy schedules, especially in corporate, where you guys, I know you're working past the. I'm seeing Sheila probably she's still in office, or working past the employer time, past 5 that is. And John, Ronnie, I can see Lucy also. I'm glad at least you guys have taken some time off to educate us on how the market is. For me, someone who is joined the market or the employment recently, I'm trying to get that strong foot as I take off, really. And I've really been encouraged, especially from the words from Ronnie, John, Lucy, who've been at least for the longer period of time, and Sheila also. So thank you so much for everything. And we're looking forward to have more such of kind of engagement so that we can also be empowered. Yeah. And also, I know time is far much spent. Probably a question. Do you think, Ronnie, specifically, do you think someone probably who had a background in a very, very different field away from economics and statistics, so basically economics, could thrive into the okay, getting into the employment space, as much as someone might be interested into it, but now probably he or she might not get into interview rooms just because he or she doesn't have backgrounds in such in such a field. Yeah. Please, Ronnie, if you can explain. Yeah, that's all. Thank you.
Okay, thank you, Brian, for your question. To answer you directly, I'll say nothing is impossible. As long as there's a will, there is a way. As long as you are determined to learn and do what it takes to be a master in any field, you can do it, man. I myself, actually, I remember in high school, I didn't take business studies. I had taken agriculture as the optional subject. But after high school, I started off with CPA, and I think it gave me a good foundation in accounting. And suddenly I started being drawn to the world of business. So I can say where there's a will, there's a way, from my personal experience. Yeah.
Oh, thank you.
All right, thank you so much, Brian. And I see there's someone who had requested for emails, and they have shared the emails. So I think the panel has been amazing, and I'm sure they're happy to guide anyone who is looking for the right direction. Okay, Bakita has really insisted with their hand, so I'll not ignore you. So just say, take a minute, please.
Mine would be a quick one. At the beginning, you asked whether there's a misconception or something that students think is in investment banking, but it's actually not. Okay, I would want to know, from what I know, banks such as those Banks of America or Goldman Sachs, they have high deal volumes and they tend to work 80 to 100 hours. Is it the same case with banks here in Kenya? Then that would be to, what's his name, John. I'd like John to answer that. And then for Ronnie, I would like to know what are some of the instruments that you use to manage positions while trading, and what would separate a good trader from an average one? Yeah.
Okay, I think I'll answer on the time, the 80 hours question. So here at Faida, we usually clock in at 8, and after 4 p.m. you can exit. After 4 p.m. you can exit. But now it's very seasonal. When it's earning season and there is a lot of work pending, you'll have to extend those hours. And also, if there's a transaction, let's say there's a corporate finance transaction that has a very tight deadline, you guys will sleep in the office. You'll find yourself at the office. You could even push to 1 a.m. and it's very rare. It happens, maybe twice a year, thrice a year. Yeah. So most of the time it's just normal working, 8 to 4. Maybe some other banks, maybe they do 8 to 5. But yeah, it's quite chill until it's earning season or there's a transaction that has to be finished before deadline.
All right. I think Ronnie can answer the final question.
Okay. I got there were two questions. The first one, how do we manage positions? I think the good thing is the market, we've had some significant tech developments that have made it in such a manner that, let's say the CDSC gives us portfolio valuations almost end of every week. The NSE itself, the systems are designed in a way that you can monitor your risk exposure on the derivative segment in real time. So we don't have to manually calculate delta exposure risks every time. That is something the system now does. And to your last question around what separates an average from an amazing trader, I think exceptionalism comes from doing beyond bare minimum. going the extra mile to not just do the outright transaction, but it's more of understanding, empathizing with the client, I think, consistently, and working with the client through the transaction process all the way to completion, and follow-up processes. So I think to the extent one does that, then you stand out actually from most. Yeah, so yeah, in everything, I think, as long as you do better than bare minimum, you stand out a good deal. Yeah.
All right. So thank you so much. All right. Bakita, you're good now.
Yes, I am. I would like to shadow Ronnie one day.
All right. So the best. Thank you so much for making time. So we've gone past 9:30. So I want to thank Ronnie, Sheila, and John Collins for making time and making this an amazing panel. We've had a great discussion, and also say thank you to KESA for inviting us to share our experiences. This has been good. We hope to do it another time. So that's it for me.